Welcome to the B.F. Anderson Technical Report for September the 6th. The Templeton Curve is what we're looking at here. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. Sir John Templeton. Templeton Funds, John Templeton, one of the greatest money managers out there. He is defining basically human behavior in the market cycle. We'll talk a little bit more about this as we go, but as we get into the report, I'm going to start out here with the options, options equity put call ratio. Now realize that this indicator, I was asked the other day about someone why this indicator was important. And it's important because funds, I'm talking mutual funds, exchange traded funds, hedge funds, tend to have a liquidity problem, meaning that they're trading in millions of shares. They're managing billions, if not trillions of dollars, and they do not have the same advantage that you have as a small individual investor. This is the whole point of the book written by Peter Lynch called One Up on Wall Street. So what these funds tend to do is they tend to use options as ways to help solve their liquidity problem. So, your Aunt Sue is probably not fooling around with options. So this is more of an institutional activity. So what I look at is I look at the ratio every day, and this is as of yesterday. We get into these extreme areas where there's a lot of put buying, or we get into this extreme area down here where there's a lot of call buying. So what happens is, as you can tell by the graph, is we tend to get into these extreme levels, and you just should be aware of that. Now, as of yesterday, we are now in a greedy type of area. This is where there's been a lot of call buying. And like I said last week, probably if you're not in the market, be very careful right now because things are kind of frothy. The market has been kind of hot. Now, the other thing that we've got to realize, and this goes back to the Templeton Curve of euphoria, the markets climb a wall of worry. People are always afraid of new highs. So, you start to think about, do I really want euphoria? Because that usually is where you get a market top. Like right here was a euphoric period. Now, this is the NASDAQ going back to 1981. You can see the trend. It's definitely a nice uptrend. No ifs and buts about it. So what you have to realize is that these times of euphoria can really indicate a market top. Now, the problem with using sentiment, which is measuring human behavior, is that this can go on for a long period of time. And I thought this was an interesting fact, but the average return for stocks going back 100 years is 8 to 10% a year. That's your average return. However, the average returns in a bull market are 20%. So what happens is that you get into a bull market and you start averaging 20% returns, that will eventually evolve into euphoria. In other words, there's gold in California, let's pack up the family and move out to California and go look for gold, that kind of thinking. So what we have to realize is that the market tends to move in stages. And so if we take this current market situation, stage one would have been 2009 to 2015, which was a long, sluggish phase where stocks that outperformed the market were somewhat defensive. So that was phase one. Phase two was where we got into this little mini bear market right here, which kind of reset everything. In other words, the skepticism and the pessimism comes back in again. So currently, I would say we're in stage three. We're about 2 years into stage three, and like I say, this could go a lot longer than we realize. Now, the other day, I was at Home Depot, and by the way, this stock has really done well. Over the last 5 years, the stock has more than tripled. And I want to say that in order to measure the Templeton Curve, in other words, where are we now? Are we in pessimism? Are we in skepticism? Are we in optimism? Are we in euphoria? Now remember, bull markets die in euphoria. However, they grow on skepticism, and they mature in optimism. So how is the best way to try to determine where we are? And as a financial professional, I have an advantage, and the advantage is people know me in this community, and they come talk to me about the stock market, or they want to get stock tips or whatever. And I kind of act as a magnet for people to come talk about what's going on in the market. So how do I see things? And this is how I would tell you to determine whether we're in euphoria or pessimism. And just listen. Look around you, talk to people, and you'll find out that you're going to see things. So like the other day, Matt Spencer and I went over to Home Depot to get some plumbing supplies. We talked to a guy named Gerald. And Gerald said to us, I said, Gerald, that Home Depot stock is doing great. I said, boy, y'all are doing really well. Your business must be booming. He goes, I don't own any stock in Home Depot because I cannot afford the stock. It's too expensive. Well, okay, all right. It's a $200 stock. But then he went on to say that he only buys Exxon. And he also told me the exact day that he was going to get his next dividend check. So it's kind of a defensive thing, and everybody kind of knows how I feel about dividends. Dividends are nothing more than a reduction of book value. So in other words, you think you're earning interest, you're not. You're actually depleting your corporation that you are an equity owner of. You're depleting that corporation of cash, which reduces book value. So it's basically like you're paying yourself. But that's a story for another time. But my point is that Gerald was very concerned about the price of Home Depot versus Exxon, and I'm going to show you that actually Home Depot is cheaper than Exxon. I'll show you that in the next graph. Then I ran into another fella. I call him Mike, the manager. He told me he had 100% of his portfolio in cash right now, which was a 401k. Then I have a card group that I've been playing cards with for a long time, and the subject never comes up. We never talk about stocks. Used to, but not lately. Then I belong to a walking group, and I call him Charlie the Walker. And Charlie basically is of the opinion that there's no reason he should risk his money in the stock market, that he does nothing but CDs and money market funds. Also with the media, you've got this real obsession with index funds, and I have to ask the question, do you really think it's that simple? No, it's not that simple. You've got to find individual stocks, and just socialism is kind of a index fund thing. But anyway, this is really the most hated bull market that I have ever seen. And I'm only hearing skepticism and pessimism. I'm not hearing any optimism out there. So I think this thing's got a ways to go. Now, back to Exxon Home Depot comparison. All right, here's a graph of Exxon. You can see for the last 5 years, Gerald has gone sideways. He hadn't made any money. This has just been a sideways moving situation where the rest of the market's in an uptrend. Now let's talk about the size here. The market cap for Exxon is $340 billion. Home Depot is $230 billion. Home Depot is cheaper than Exxon. So if I were to advise Gerald, I'd say, you ought to own Home Depot, just buy fewer shares. Well, then he, talked about the dividend. Well, the dividend payout ratio for Exxon is 64%, which means that they're paying out 64% of their profits to pay that dividend. In other words, they're reducing the book value of the company where it could be increasing. They're reducing it by 64%. Now, the dividend payout ratio for Home Depot is 45%. Now, we all know that the dividend on Exxon is about 4%. The dividend on Home Depot is about 2%. But if you go back and look at Home Depot, you've got a very nice, strong uptrend here. In fact, this is one of the best managed companies in the United States. And here we have Exxon, and there's no uptrend. It's just a sideways movement. So what I'm saying is that as you walk through life, you're going to run into people that will help you understand where are we on the Templeton Curve. Let's get into the top 5. And again, remember, top 5 is a watch list. It's not a buy list. Here's Advanced Micro Devices. Again, smoke up a chimney. Stock is doing incredibly well. The stock took off about the time that they announcnced a new chip that was going to be serious competition for Intel. So that's possibly what's going on there. Here's Carvana, which is in the used car business. They give you a 7-day money-back guarantee on the car. I don't know. It seems awful good. The stock's acting real well. Here's Lululemon. They just announced earnings here recently, and the most important thing was that they announced that their same-store sales growth rate was 20%. Usually when you see a somewhat mature retailer, if you get 2 to 3% same-store sales growth rate, they get excited about that. Well, they came in at 20%, and they've got a new management team, and I think they're doing very well with their internet webpage. Here is Roku, which is what I call the best gateway to streaming video content on TV. I bought this Roku after going through about I have a Google Chromecast, and I also had a Amazon Fire. None of those streaming devices worked as well as the current device I have, which is called a Roku Ultra. Really, really nice product. All right, here is a company called Square. We know that Square is also involved in the cash register business, but what I've heard lately from analysts is that the Square Cash app has more downloads currently than Venmo, which is owned by PayPal. So, as you can see, Square is doing quite well. So, in conclusion, we have a market where there's still not a lot of optimism, and there's certainly no euphoria. I'm not seeing any of that. I'm seeing more skepticism than anything. So keep in touch. Let me know if I can help.